Forget about Netflix and chill. Get ready for Expecto Patronum and Bonum, because Netflix is set to acquire Warner Brothers for about $83 billion. So I'm going to open up a put credit spread on Netflix. I'll show you what I look for to set it up and how to set it up, and we'll open it up. So in the news recently, Netflix announced they're going to acquire Warner Brothers Discovery, and that includes TV studios, HBO Max, HBO. So these have some huge IP related to it. It's going to include Harry Potter, Game of Thrones, DC Comics. So it's huge opportunity for Netflix. And even though there's some pushback from some Congress people and the Trump administration, because the Trump administration would prefer Paramount Skydance to acquire this, and there could be some antitrust, anti-monopoly things that Congress and the Trump administration could look into opening against Netflix on this deal. Warner Brothers does plan on spinning off its cable networks business, which I think is going to help them in their favor a lot, in order to say, hey, we're not a monopoly. See, we're not doing those news networks in this deal. That in mind, I think that the stock could go up in the future. And also the fact that there's different strong opinions on this on either side, this is going to increase volatility on the stock, which means that the options premiums you'll get for entering into the deal are going to be higher. So as far as options are concerned, this is going to make us more money than usual on like a normal stock. So we're looking at Netflix on the Robinhood app, and you can see this is what it's been doing for 2025. It's gotten as high as $134 and as low as around $82. So let's check out the options. So let's click on trade options. And in my opinion, I think it's going to go up. You might think it's going to go down, so you could do an opposite strategy as me. But I think it's going to go up, and I'm going to scroll down to the put credit spread. Okay, and sweet spot for these kinds of spreads is a month to a month and a half out. So we could pick January 2nd, January 9th, January 16th, any of those three. So let's see what we have here. Oh, I see that some of these bid prices are showing negative. So what that tells me is that these spreads, the bid-ask spreads, are wide, and I cannot trust those numbers. So let's pick a different expiration date. Nothing's showing up, and that's not a glitch. Not really. You have to click on width and submit how wide you want these two positions to be. I always pick the smallest width. And we see that we have some more negative bid prices. I don't like the looks of that. So let's go further out. And now we have something more normal and more something I can trust. So this decides for me that I'm going to pick mid-January as the expiration date. It's 42 days out. That's between 30 days and 45 days. So we're good there. Now I also want to check the probability of profit. So I'm actually going to back out of this because these deltas do not tell me that. These are actually a combination of the short and long puts. So it's only showing me how much this combined position is going to move with the underlying price. It's not actually telling me probability. So I'm going to back out of this. So just keep in mind, okay, January 16th, that's our expiration dates. We'll back out, and we're going to go back on January 16th. So with the share price at around $99, I want to look for a chance of profit of, let's say, 75% chance or better. So I'm looking at $94 or less for the strike price. So let's keep that in mind, $94. So we're going to go back to our builder. We think it's going to go up. So we're looking at put credit spreads out for mid-January, picking the smallest width as possible. So those option chains that we were looking at just before, for selling puts, the number I'm looking at is the number on the left. So for example, that says $99. If the share price dips below $99, then that's when we start to lose money. So that's with the chance of profit that we were looking at before. So I'm going to be looking at these numbers on the left here. So I'm going to scroll down to what we said before. I want to look for a strike price that's about $94 or less. So we could do one of these. Netflix would have to drop 5.83% before we start to lose money. And we're risking about $2 to make $1. So that's really good. Gonna set in a price here. It was at 14. Low fill likelihood, what about 13? Medium fill, okay. Let's put in 10 of these. Okay. Okay, welcome back. So I had to lower the limit price by a penny and the market accepted it. And that's how we open up a put credit spread on Netflix. So thanks for watching. If you like this kind of content, give me a like and subscribe, and I'll see you next time.